Our content is intended to be used and must be used for informational purposes only. It is very important to do your own research analysis before making any investment based on your personal circumstances. You should take independent financial advice from a professional in connection with or independently research and verify any information that you find on our website or podcast and wish to rely upon, whether for the purpose of making an investment decision or otherwise. What's up, my future 1%ers? This is Marathon Money, brought to you by Wincrease.com. I'm Cam Jones, Prince of the Stock Market, and you know I'm with Kenny Coins. What up?
What up, man? Tight. It been, we just shot up to 26,000 in the market.
Yeah.
What NASDAQ, man, that was the week. Now I have to give NASDAQ props, man. I feel like NASDAQ just took off this week.
It did. It actually did the things that we were talking about. I think it was like 2 weeks ago on the podcast.
Yeah, you know what I mean? I personally think, and I think that, man, I have a feeling the NASDAQ in a few years, 5-6 years from now, NASDAQ gonna be around 13,000, just the way society's moving towards technology. We still a lot of people think, man, we're on full blown, you understand, we still in the infancy stages, man. You know what I mean? You gotta understand, millennials are like the first generation that's really between old and new. So, the generation out of that, they're gonna be full bred of technology. Once you get like 3 generations in, that's when everything's gonna start settling in. I think NASDAQ is, you know what I mean? You gotta start looking towards that, because that could be the thing that makes your portfolio.
Right. And I agree with you with that generational thing, that point you just made, because I just look at my nieces and my nephews and stuff, less and less, I think we talked about this before off the podcast, less and less they're playing with toys, physical toys. They're playing with them less and less. They like to get the phones, the iPads, those are their new toys, which plays into technology, because obviously that's technology. So if they're exposed to that early, they're going to be exposed to more things in the heavy technology sector, versus playing with Ninja Turtles or Barbies or something like that. You know what I'm saying? So I agree with you there. Thing though about go ahead.
No, I was just saying that you're 100% correct on that one, because there's a reason why Toys R Us is non-existent.
Yeah, even though I think they're trying to come back, but
I don't know, man. I don't see the purpose of coming back unless they're gonna put a whole bunch of iPads in the store. Yeah. And all they're doing is making Apple richer. Yeah. That's not really a good business model.
Right.
You know what I mean? So
I agree with you. The market though, overall, I was taking a look, and I like where we at. I feel like we are going to hit new highs, possibly this week. If you look at the NDX, which tracks the NASDAQ, we only about $150 away from the highs of the NASDAQ, and that could happen this week. My problem though is, when I look at these things, and I look at the moving averages, I feel like whenever the general market gets too far away from the 200-day moving average, we start to see it move back towards the 200-day moving average. So right now it's up way above the 200-day moving average. So I feel like it will come back down more towards that. So my disclaimer is, after we hit those new highs, I would really take a hard look at, some things in the portfolio, like, how much percentages are you up on some of your individual investments? if you up, 30-40% within a couple months, or some of these, you might want to take those off the table just because, I'm thinking that, it's not going to be some ridiculous correction or something, but there's money to be made there if you take your money off the table and then buy it back at a cheaper price. You know what I'm saying?
Of course, 100%.
It's almost like, I know that you're not really supposed to try to time the market, but the indicators are there. It's basically right in front of you. So if you can, I would do it.
I personally think the Dow's gonna hit maybe by the end of the year 29,000. I think that's possible. The S&P 500, I personally think that's gonna hit 3,000. I think that would be huge for the S&P 500, just for where it started. S&P 500 been one of those things where it's slowly moving. In the Nasdaq, I think it's gonna be close to 8,500 by the end of the year. That's my thinking. I think a lot of people should start focusing on two major index. I think the S&P 500 and the Nasdaq.
Right. Leave the Dow behind.
Yeah, I personally think those two are really just forward, future thinking type indexes. They're full of technology. They're full of things that are going to be the main focus of what the economy's coming. I think Warren Buffett has something on the nail when the S&P 500 was at 1,900. He said, I think everybody should be putting their money into the S&P 500.
Mm-hmm.
You know what I mean? That's true. I think so too. I've been doing it since for a year and a half now, but personally, those two indexes, I personally think they're the future of what technology in the world's going to look like. Small caps, Russell 2000, small caps. I don't really have a really big opinion on that. I feel like it's just another NASDAQ. You know what I mean? Or another S&P 500, the only way you want to put it. I don't really, focus too much on it. So that's my opinion.
Yeah, I feel like the people, the small caps, the guys in the Russell, I feel like if those companies have a long-term future, if they have some type of technology that is, innovative, that's keeping their company afloat, all of those companies are gonna get bought out. You know what I'm saying?
Yeah.
Those are all those people
that's
in
how
the Russell.
I see this. That's how I see the small caps, man. I don't see the small caps as, another Dow or another S&P 500. I feel like you see so many companies that are in the Nasdaq and the S&P 500 in the Dow go into small caps and look for companies they can buy, and next minute you know they're gone.
Right.
Their shares are gone. You know what I mean? So I don't really see the small caps being something that is gonna grow. I personally think you should still invest in it.
Yeah, it's still money to be made there.
Money to be made.
I think there
but at the same
NASDAQ.
Yeah, at the same time, it won't be. You could buy a share company, or you can buy a company in the small caps, and next thing you know, they get bought out by somebody huge, and your shares are getting fused with that company's shares.
Right, which is a good thing. You're gonna make money. They're gonna buy them out for way more than what the stock price is.
Yeah, of course.
But that's how I see the Russell and the small caps. That's buyout bait right there.
Yeah. But man, let's get to these second quarter picks.
Oh yeah, we had some explosions, man. I guess number one, man, was MTBC up.
Yeah,
13%,
that's actually surprising.
13% on the week.
You know what I mean? That was actually surprising. MTBC, just from that $4.50 move, it moved up 50 cents. That's a good move. It's 13%, correct?
Yeah, 13.38% the last 5 days. So that's a move right there, man. Like
that is.
That's a move.
That is.
Let's just quickly go through. some of the other ones. If we, let me bring it up. Let's do DocuSign. They're up on the week 3.8%, which is pretty good. Obviously, MTBC is the big mover. Facebook was up pretty good this week. They are up. Come on. 5.42%. I think the only ones that were down were Fun and COTY. They were only down 1%. But all the other ones, I mean, Glue, they're at new highs right now.
Glue's a big winner, man. I gotta give it to Glue.
Yeah.
Nah, Pfizer, Take-Two climbing up slowly.
Right. So far so good on everything. The only thing I would caution people on is MTBC, especially when something rises like that in a couple days. And plus, I think we had said it when we picked it. We looking at this to go a little over 550, closer to $6. That's new highs. Right when you get there, right when you get close to that area, I would look at, hey man, we might want to be out because we're gonna be close to 30-40% gain at that time.
In Glue right now, we are up 43% from the first quarter.
Right. We got some.
Remember, we got it at $7.89. We got some
ballers in there, man.
Yeah, that's almost a $5 move.
Where else y'all getting this from besides Marathon money?
Where are you getting it from? You ain't getting it. You ain't getting it on CNBC. Visors up 5%. Take-Two finally trying to make the initial comeback. A lot of things going on with Take-Two that's making it better. Definitely a lot of schools coming out with varsity esports. So over 14 colleges has it as a major D1, D2, D3 sport. So you see how that goes.
Right. So I guess we get right into our topic, man, which is how much money do you need to retire? Now, I see some of these stories about people, they will save like $1 million or something. They'll be 40 years old, and then they'll say, yeah, we saved $1 million. We're gonna retire, and their plan. I'll hear some of their plans. Their plans, I gotta say, is a little ridiculous. They're gonna live in some small house, and they're going to drive a 15-year-old car that's been paid off, and they're going to set a budget of, $200 a month, no cable TV, no internet, all sorts of man, that ain't living to me. You know what I'm saying?
Nah, that ain't living. You work all that hard just to be poor again. That
right.
Make no sense.
And then, what's gonna happen when the 15-year car, you gotta get a new one. I mean, that thing ain't lasted forever. You know what I'm saying? So we here to try to help people, think about different ways to make money, and also how put you in a better position for retirement. I mean, everybody can't retire at 40, and plus, I don't really think if this was like the 80s or something, $1 million could probably take you far at 40 years old. At 40 years old, $1 million would probably last you, I'm gonna say till 50, especially if you're not working. You know what I'm saying? Now, if you're working, you're spending a third of your day at work, which means a third of your day is spent where you cannot spend money. Now, if you're just sitting around the house all day, obviously you can spend money because you're not doing anything else. So,
yeah, man, let me tell you something. If you're sitting around the house all day, you're more likely to spend more money.
Right.
Likely to spend more money.
And if you got $1 million at 40 trying to retire, you ain't about to be taking vacations everywhere because you got to stretch that $1 million out for,
40 years.
Yeah, about
40, 50 years.
Yeah, about to say.
If you live up to 90.
That ain't
going
to happen.
About you. 40, 50 years is a long, long time.
That ain't gonna happen. So how much money do you really need to retire? And I know we were talking about this before we got on the air. I want to just throw out there how many different revenue streams that people have in retirement. So let's go. First, man, you know what? This is weird because I was going to say first 401k, but you're not, some people, they may not have 401k, right?
That's 100% correct.
You may not have 401k. So, but let's just say
and if you did, the average 401k right now is less than, between the average person between the 35 and 60 average 401k right now is less than 250k.
Oh, I thought you were about to say it's less than 60,000. I'm about to say that's just terrible. Less than 250k.
Let me tell you, 250k after you take it out and you got to pay all those taxes.
Right, that's half. They basically cut that in half.
You might as well call it 60 G's.
Yeah.
Yo, because once you take it out, you pay those taxes, and after you pay those taxes, you know what I mean? You're in retirement mode. You know what I mean? I guarantee you have to get a place to live. If you already don't have one, you know what I mean? Things start changing for you. And most people that do get retired, the first thing they do is go on an expensive vacation.
Yep.
75% of people that get off retirement go on a month-long vacation.
Hey, I'm not saying you don't deserve it, but you may not be able to afford it.
Exactly. And the thing is, I don't really think a 401k is an investment vehicle, period.
I don't think it's an investment vehicle. I think it's a savings vehicle.
I think is, if you don't do it, you're stupid.
Right.
That's what I think. I'm going to put it, be honest. If your job matches you 100% and you don't do it, you're just stupid.
I agree with you.
There's nothing more to it. There's no way you're not going to take free money. That's free money.
Right. If I'm just walking down the street just throwing money in your face, you just telling me you just going to walk right past, you're going to take it? They give you free money. The company's giving you free money. Now, I got to say something about that, though. It's free, but it's not really free. Because if you do the math, if you get taxed, I think you get taxed when you take your 401k out at like 40%. If you get taxed 40% and the company's matching you, basically the company's match is basically your taxes.
That's it. You might get to keep.
You might get to keep something, but for the most part, let's just keep it real.
You don't get to keep. You don't get keep. If they give you 100%, you're probably gonna keep about like 50 or 60%. Still better than nothing.
Right, still better than nothing. But some companies won't match 100% though. Some people match like 80. You know what I'm saying?
Or they'll just match just enough to cover the taxes.
Right, yeah. So basically that match is taxed. Yeah. It's covered by taxes.
You really just matching, you know what I mean? What the company, you really just savings. It's a big giant savings account.
Right, exactly.
Now, I'm not saying that don't mean, oh, you shouldn't do it. No, you should do it. Because at the end of the day, it's, even if you only get 20%, 30% of whatever they left, it's still 20, 30%. You know what I mean? Over time, that money does grow. You know what I mean? I just don't see it as an investment vehicle. I see it as a savings vehicle. I see it as a long-term, somewhat good percentage savings vehicle. That's how I see it. Now, we want investment vehicles that come into a large income that produces continuously over time, consistently over time. That's an investment vehicle. Like, for example, buying a second house, even if it's like $100,000 that you pull the mortgage out of your own house to get it started, and then you maybe do Airbnb, rent it out for a year. That's an investment vehicle that generate income. My goal with that, if I was ever going to do that, you know what I mean, which I think everybody should do, that is do it to the point where your current mortgage is getting paid off without your income coming through.
Mm-hmm. Yeah, so you can't look at some of these things like, hey man, I'm about to, get a new house, rent it out, and think you're gonna get rich off of it. I mean,
no, you're not.
You need to set a realistic goal. Like, okay, this house is going to pay for this. Now, if you get rich off of it, fine. You know, if you come up on something like if you bought a house in like the late 80s, early 90s on the West Coast, and then, you know, that whole housing market exploded, you know, then hey,
Yeah, of
that's
course.
excellent. But most of the time, it's not going to be like that.
90% of the time, it's not gonna be
You
like that,
know?
unless you got lucky and you got it in the right spot at the right time, and you sold it at the right time. There's three things you gotta hit. You know what I mean?
Yeah,
And I personally think renting homes is a income driven vehicle. It's not something you don't have to do too much. It's not a renting a home is not a get rich quick scheme. I don't care what you say, it'll never be that. You know what I mean? It's a long term process, and if you do end up getting rich from it, it's 5-10 years down the road.
right. Yeah, yeah.
It's not buy a house and get rich tomorrow. Trust me, it's far between. If you get lucky, it'll be closer to almost 5 years down the road when you actually see that check. You know what I mean? So my goal is, first one, if you can rent a property, do it. That is a great way to say, okay, you know, I got this property, I'm gonna charge $1,500, my mortgage $600. You know what I mean? I'll pay that mortgage and this mortgage, so that's $600 out of my own pocket that
Right.
I get to keep from what I make. You know what I mean?
Every
Now
month.
you got both house valuing up. So it means like by the time you retire, if you can cut half of the value of both house down, the equity in both of those houses, you know what I mean, will be worth something. That's how you have to think.
I'm glad you mentioned you know, renting the house thing, because to me, man, I just don't feel like it's for everybody. It's definitely really not for me because I'm not that much of a people person. You know what I'm saying? And you really, if you're dealing with tenants and stuff like that, you gotta listen to some of their problems, why they missing rent sometimes. You know, hey, if it's me, I really don't care why you missed the rent. I just want, you know, I just want the
Yeah,
money. But
money.
you know,
Yeah,
that's why I can't be, you know, a
yeah.
landlord. I can't be a person that rents houses. But we mentioned it last week. A company called Rich Uncles, which I feel like is more for the person like me who does, you know, I wouldn't mind getting another property and renting it out, but like I said, I would be a terrible. I'd be a
And here's the thing: if you're one of those people that doesn't want to be a landlord, you also have to get the money to have somebody do that stuff for you.
right, exactly. So that's more money out your pocket.
You know what I mean? Like if you don't have the capability of having the money to do that, you know what I mean? Either you wait until you get 3 or 4 houses and then do it, because you'll probably have a little money to hire maybe somebody to do it at a cheap cost. But at the end of the day, you know, that what Cam is saying is that's the reason why a lot of people don't like it. But you know, I mean, it's part of the struggle, it's part of the thing. You
Right,
know what I mean?
right.
You want to build up a certain type of wealth, you got to go through those beginner stages.
Yeah. But I feel like, man, rich uncles, I feel like that's a way to invest in property and
Of course.
you don't have to be the, you know, person chasing people down for rent and everything. You're basically letting other people do it now. I think that and you know more about this than me, Kenny, but I think that the thing about rich uncles where you kind of compromise is, you know, they're giving about 5% returns, 8% returns on property, while, you know, if you were to own that property, obviously you'd see more of a return, but you'd be taking more of the risk though. You know what I'm saying? I feel like
Yeah.
rich uncles is a way to invest in property, kind of have your own, and you're getting paid off other people paying the rent, but you're only getting paid like a dividend basically. But that's still something, and you're still in a different area other than stocks, because the goal is to be diversified. You know what I'm saying? We can't have like a bunch of stocks and have nothing else.
Yeah. Here's the thing that, you know, I think is great about this. There is a self-directed IRA you can open with Rich Uncle. That's the thing that makes this website good. Not only there is that, if you open an individual account, all the accounts does this. say you put, I'll do a low number, $10. In 25 to 30 days, they're gonna give you a dividend from the rental income of 7%, 6%, whatever it is that that particular investment's into every month off of your $5. And you can reinvest it or you can keep it. You know what I mean? Obviously, you know what I mean, it's to grow your money. It's simple, it's easy. I personally think if you are working and you're under the age of 50, to me, every paycheck it would be $100. You know what I mean? Just for the fact that you get that, reinvestment of dividends every month. It's a great way. You can take out your money anytime you want. It's not something that you put your money in and it gets stuck there forever. It's you sell your shares, you get all your money, or you can just put 5, 10 grand, $100, whatever you want to put in there, and you just take your dividends. You know what I mean? I wouldn't do that, but you can do that too.
That's a good.
I think of.
My bad. Go ahead.
No, you can go.
I was just gonna say, I think that's another way that people can, earn some money in retirement too. If you didn't want to do the Airbnb route, if you didn't want to go the Airbnb route or getting another house, that's another way to gain some income other than with stocks. Because you if you don't want to become a Walmart greeter after 3 or 4 years of retirement, you have to figure something out, and it's better to figure out how to do something with minimal effort. You know what I'm saying? Especially if you're older, you're not trying to be doing any strenuous work. Make that money work for you in your sleep. And these are some of the ways that you could do it. Savings accounts also. I mean, they're creeping up a little bit, but they're kind of low right now still. So, but I mean, I guess that's another avenue. Is safe because let's just think about the savings account route. Let's say a person retired. Let's say, man, they did really good for themselves. They retired with $20 million, right? Let's say Ally's paying 2% right now on $20 million, can you live off that, right? So if you got, let's do the math. I got my calculator out here, so I'm cheating. 20 million, that would be, that's $500,000 a year off 2.5% savings account. I think you can live off that. Is that correct?
100%. You can do more than live.
I mean, but 20 million.
You can spend money unnecessary. Oh man, you already 60. What you saving money for?
A $20 million retirement, though, is probably unrealistic for the average person who listens to this podcast. You know what I'm saying? But I think that $1 million,
$500,000, 800,000, close to $1 million is more realistic.
But I'm just saying.
You know what I mean?
If you took that money in retirement and you put it in something like a savings account, let's say even better, dividend account, dividend stock. Even though I know we're trying to give you different investment ideas other than stock, but if you did the math, like, hey, I'm getting paid, 4 or 5% on this dividend. Can I, not really live off of that? I think that's going to be, I'm not doing this on the calculator, but I think that's going to be something like 25,000 a year on $1 million, something like that. Obviously, you can't live off of it, but can I get by on that plus everything else that I got going that's coming in, maybe a pension, something like that? And so then you're making that $1 million work for you until you need it. You know what I'm saying?
Yeah. And that's the thing, man, is I feel like it's such a good point. It's like, yeah, say if you, like, for example, that $1 million is 25, even shoot 30K annually.
Right. Let's just call it that.
Yeah, you know what I mean? Man, you got a house, and if you got a spouse, you know what I mean? Both of y'all got health insurances, car, unless your car's paid off. At the end of the day, man, when you get older, those expensive. There is expensive. It's just a high dollar amount, and unless you got multiple streams of incomes coming in, $1 million ain't gonna last you 30 years.
Nah, ain't gonna last you. That's why I be hearing these people like, like I said, like 40 years old, like we saved $1 million. Like, man, that ain't enough.
It's not. Money. You know what I mean? And you hear about, you know what I mean? And unless you have $1 million and you still working and you got it in an investment account or something that's 3-4%, when you get $1 million, you tend to have banks tend to give you a higher percentage. On your money.
Right.
You know what I mean? It's just that's the way the bank rolls. You got less than that, you ain't talking. They ain't talking to you. You're gonna get what everybody else is getting. You're getting 0.001. That's what you get. When you have over $1 million, they tend to push your percentage up to 2-3%. My personal thinking is just do the research of looking for different avenues to make money. Stock is not the only avenue to make consistent returns. Stock is let's put it this way. Stock is, put it like this, you can make great high returns, but it comes at a great level of risk.
Exactly. When you're older, retiring, man, you want to limit that risk.
You want to limit that risk. You know what I mean? Yeah, if you think about it, if you got Teladoc at $17, $18 when we got it, you know what I mean? You're talking about almost 600%, 700%, 800%. You know what I mean? Yeah, that's crazy high. You know what I mean? If you were to put $2,000 into it, yeah, you have a ridiculous amount of money, you know? But how many times can you really take that kind of risk?
Exactly.
You know
that's
what I mean?
Not going to happen often,
It's not going to happen often, and the thing is that you need to find different avenues. That's why I'm saying that the Airbnb, the rent, it might suck, but if you're on the age of 50, you do it early enough, you know what I mean, get 2 or 3 houses. Yeah, you might get somebody who will do it for you, where you just collect a check now, you know what I mean? And that's why I said, like, do it enough to pay off your mortgage of your current house. You know what I mean? Because that's going to be your biggest debt when you retire.
Yeah, you can also do Uber. Just don't do Uber right, man. Don't getting violent on people. You know what I'm saying?
Yeah, there's Uber. You know what I mean? But it's still work.
It's still work. It's still work.
It's still work. But there's so many things out there that you can easily create different investment vehicles. Like there's people that there are different income vehicles or your retirement. There's people that they teach once a week. They teach a class and make $200-$300 a week they teach once a class. I know this lady that does it. Yeah. That's something you can easily do to create another income and then take that money and put it somewhere towards that makes money for you. Definitely. You know what I would do? I'm going to be honest with you. So it's something I do. There's something called a private Chase account. If you're like 20 years away from retirement, you know what I mean? If you have $500,000, 600,000 somewhere, and you can take 100,000, I would go to a private Chase bank account and do their investments and put it on conservative, because it's at least 5 to 6%.
Mm-hmm.
And that's another investment vehicle, another income stream you can do and leave it until you retire. At least it'll be 250,000, 300,000 by the time you retire, because that 6% will just keep on rolling in. It's a great, I think if people do have the money, that's also something I think you should do.
If they've been listening to Marathon Money since we've been started, they should have that. You know what I'm saying?
Oh yeah, they should have that. But we're just, it's surprising because you hear this whole thing, the average American between the age of 27 all the way to 55 has less than $4,000 in their savings account. Yes. And I'm just like, that's just ugly. You know what I mean? It's just like, and you understand, like, the baby boomers, they don't count. They're already 60, 70, 80 years old.
They don't count.
They don't count. You're talking about Generation X, millennials. You're talking about, you know what I mean, the generations after them. What are they going to do? You know what I mean? If they're 55 years old with less than $5,000 in their account, you know, that's just sad.
That's sad.
It is, man. It's sad. There's really no more pensions. And if you do get a pension, you have to have a really sweet government job to even see one. But it's crazy. You know, that's something that needs to be talked about every day, my personal opinion, because in the next 15, 20 years, you about to see some, either homeless rate about to go up, or a lot of people not going to have money to even sustain life besides getting work.
Right.
You know?
So, hey, you know, we try to give you some good tips on the show. Hopefully we did. Hopefully the audience out there who's thinking about retiring, whether you're trying to retire early or you at the retirement age, you know, hopefully you can get something out of this and think about doing something else other than, you know, going on a month-long vacation. I'm not saying that's terrible, but hey, you got to take a real good look at your money, realistic look. I don't care if you work 40 years of your life. That doesn't entitle you to anything. If you don't have the money, you can't do it.
It really doesn't, man. People needs to get that through your head, man. I don't care how long you work. It doesn't entitle you to anything. IRS already proved that with the Social Security. You know what I mean? Oh, you did 60 years? Well, we don't have it anymore. Yeah, so I don't know what else to tell you. You work 60 years? Oh, I'm sorry. You know what I mean? It's not guaranteed. You know, they take it out of taking it out of your check. That's guaranteed.
Yeah,
that's the thing. That's guaranteed, but not guaranteed you're gonna get it. And the thing about it is, you know, I think everybody, I don't care if you're 20 years old, you need to take a look at what your net worth is. Yeah. You really need to take a look at what your net worth is, because that's going to make a big, huge difference on what road you're going headed to. That's where I first start taking a look at your net worth, and then find out where you want to be. Number one thing, figure out your net worth, and then ask yourself what kind of lifestyle you want to see yourself live after you get 50 plus years old. Right. That's the first two questions I'll ask myself. You know what I mean? If you want to be out here balling, you need to find another job. Yeah. You know what I mean? So
man, hey, we running long, but I think it was deserved. You know, we needed to talk about these things, but make sure you can follow me on Twitter, Instagram, anything. StockTwits at Camboni11, CAMBONI11. Also, look up Marathon Money on Spotify, and follow us on Spotify, and make sure you support our podcast. You can support it by Cash App and Marathon Money to Cash App, or hit the link on Wincrease.com on the podcast link. Show link, I'm sorry. All right, I'm done. Kenny, go ahead.
You know, King Kong 23.
Oh, hold on real quick, man. I don't know if you saw in our Facebook chat. Everybody was trying to figure out, they couldn't find your Twitter, man.
My Twitter?
Is it Kenny Collin 23? I looked it up too. I know I follow you, but I don't see you on Kenny Collin 23.
You don't?
No.
I think, you know what I mean? I do tweet.
Yeah, I know.
I always see yours. I gotta look at it. Man, I know my Instagram and my Facebook. You know, I mean, you just put Kenny Collin, you'll find me. Yeah. It'll be under Kendrick.
You should change your handle, man, on Twitter and or Twitter at least, to Kenny Coins.
I should. But I'll figure that out. I'll get that straight away next week. Thought I was saying the right thing. You know what I mean? Sometimes I don't really look at my handles anymore. You just because you don't have to sign in like you used to.
Yeah.
You know what I mean? Now everything is just you go in, you just
look
there.
at the phone. You signed it.
Yeah. You know what I mean? You just there, you know what I mean? So hit us up on the link, support us. Try to get people come to listen to Marathon Money. We're definitely getting a lot of new people. Much appreciate the support. Thank you.
So, all right, man. Till next week. Peace.
Peace.